Welcome to Apex Payment. So I'm going to start off with a beautiful philosophy. Well, I mean, it's a quote that I read this morning, literally, and it reminded me that I can share with you guys some insightful knowledge upon it. It said, if you feel pressure, it's only because you haven't practiced enough. How beautiful. I remember when I used to start my journey as a trader, I always felt stress. To the point I remember I was having like dandruff. And my fiance was like, what's going on with you? Like, are you stressed in life? And I was denying it. I was like hiding the fact that I was stressed based on the fact that stress is so powerful that during the moment when you're stressed, you don't actually know that you're stressed. Well, I mean, you know it, but right after it, your brain makes sure that you're gonna erase and completely forget what happened during that moment. So most likely is that all the good and the bad that happened during that day, you most likely going to repress it. Because unfortunately on that sympathetic nervous system, you are not really there. You're not aware. Because if you'd be aware, you wouldn't choose to be stressed, or you wouldn't choose to have fear instead of gratitude or peace. So it reminds me also, Bruce Lee said it very good. He said, I'm not scared of a man who throws 1,000 kick. I'm scared of the man who throws 1,000 kick. I mean, one kick a day for 1,000 days. That is a really beautiful philosophy. I'm gonna repeat it back because I fucked it up the first time. I'm not scared of a man who throws 1,000 kick. I'm scared of a man who throws one kick a day for 1,000 days. And it's very insightful because if you could be or have a certain amount of discipline and keep it consistently every single day, the momentum that you're gonna gain from that habit and that way of being is just incredible. So without further ado, today I want to talk about specifically, well, that philosophy. Hopefully that was insightful for you guys, because every time you will feel stressed or every time you will feel pressure, just know you have a lack of practice. So it's not just by watching my YouTube videos, it's by also taking whatever I say into practice every single day. All right, so today I'm going to show you guys a little bit of Fibonacci. How does it work? Why do we use it? What proportion do we use? From where to where should we draw it, and whatnot. Let's get ready. I'll see you soon. Welcome back everyone to Apex Payments. So we're going to talk about the Fibonacci, the important tools everyone should know about it. First and foremost, you want to copy exactly the same sequences, and I'm going to explain to you guys the 100%. Let me just extend it like this. And so those ones are the take profit area on the green one. The 200% also to take profit. Same as these ones. All right, and these ones as well. Like you guys could extended it to our minus 261. These are take profit area. Okay, so remember we're using this for a take profit area. We have the 0% is the beginning or the end of the movement. So this is where you're gonna draw your sequences of Fibonacci from the high and low. The 100% same thing. This one right there, it's going to call a desperate level, okay, of smart money. So DS. This one is a smart money stop hunt. Whatever, my drawing, I failed my art class, so you have to give me that. And the 61.80 is the level of golden ratio, which means, remove these ones, which means it's a ratio that it is very, very, very probable. It's one that smart money concept love to go toward. So this is where they have a movement like this. They like to retrace toward that movement, and then you see an impulsive move. So this is the golden ratio. 50% is half of the movement. All right. This one is excited. All right. This is the meaning I give toward my Fibonacci levels. And this one is very excited. Okay, hold on. I'll show you guys live on the charts. What does it look like? So these are the sequences. You guys want to have it the exact same thing. If you guys aren't familiar with Fibonacci, well, welcome to Fibonacci's. We're going to go 1 hour. And I remember a particular move. This descent here, I remember because I missed it out, and I had almost went in a FOMO, but I did not because I have experience and I'm a professional. I see this move right there. So the last impulsive move from this specific movement, and if you see, I jot down from the high to the low, we have a perfect touch of the 78.60. Okay, so if we go on a 15-minute time frame, you guys will see a little bit more on detail what happened. So we were on a lower low all the way here, created a channel. We had a beautiful stop hunt. Okay, then right after it, we went all the way back down here, found a zone of demand, went and tested our 38.20, which this is an excited level. Okay, then afterward went all the way back down here and retested our 23.60. Let me go on a 5-minute. You'll see it even more on detail what happened. So the moment it went down here, it tested our 23%, and directly you guys will see a very impulsive move, and it went straight hour basically. So once again, these meaning towards all those levels were accurate. And then after that, we had our take profit areas. So let's just say, for instance, I wanted to enter, let me remove this. Let's just say, for instance, I wanted to enter on that move on the 71.6, something like that, and we could put our stop. So stop loss, you can literally put half of the way of the 100% and the 88.60. Just to be safe, you can just put it right on top of it, okay? Or you can just put it literally the same level, but you don't want to get out because of a double top. So just a little bit on top, just to be safe. And your take profit, you put it right on this level because you see some structure on the left, and you could also have some confluences of Fibonacci's and whatnot. But depending on your fundamental, listen to me carefully. Fibonacci's does not dictate you where the market is going. It is only giving you a indication of your take profit, your entry, your stop loss, and that's it. That's all. Okay, they're technical tools, just like all the other technical tools. They're not indicators of where the market is going. It's only fundamental that's going to give you that. So that is clear. We have a almost 5-to-1 risk to ratio. That would have been a beautiful trade. Remove this. Let's go with another example. Let's go on a daily one. All right. Let's just try to find one on daily, and I could see one. So the more experience that you're gonna have, the more you're gonna see them quickly with naked eye. I see one perfectly here, so you guys could see the movement starts from here and ends right there. And this one, let me guess, it's a 38.20. Let's see, shall we? Right there. And right there, and boom, there we go. A beautiful, it's actually very precise, this one. You see a precise 38.20. Remember, what did that mean? It means excited. Okay, smart money concept, have an agenda. They want to fulfill it before the interest rate cut in November, I believe, and also we have the election. So I'm assuming that they wanted to do it right before all that. And just as a surprise, we see almost a straight arrow. How many pips? We have 1,200 pips. It's a lot. This particular trade, how we could have taken it, could have leave it right this. All right, take our stop loss, put it down below. We're gonna go in a small time frame just to see all the little details. And you could just leave it on the first take profit, which is 27.40, round number, why not? 40, and voila, like this. And we're gonna go on a smaller time frame just to see a bit more structure. So what happened here? We had a zone protected it right there. Try to burst into it the first time, second time, third time. So the third time was not successful. If I remember, this was CPI or retail sales. I don't remember what day, Thursday. So I think it was retail sales or CPI, whatever. Doesn't really matter. They just stop hunted anyone. So whomever was entered on those position, if you had a break-even position from the previous day, well, you would have been out. So the wisest move was to just leave your position, have a decent amount of stop loss. You had, I don't know, 60, 70, whatever. It's quite a lot, but considering the risk to ratio, yeah, that would have been a beautiful one. I'm not gonna lie to you guys, I had a position here and unfortunately I took it off right there, like 26.35. I think even earlier too. And the reason being is you don't know, like at that period of time, you don't know if that's a correction and they wanted to go a little bit lower to have a better price, or they just were ready to just, you know, unload the guns. You don't know. And then the only way to know is what you currently see in the market. So, and also you could see like the 23.60 was quite effective, you know, a few touches and then eventually pierced. Like literally you could also combine like 2 Fibonacci's and then put your position like this. So the first one that I had initially, like right this, like that, right? You could have entered here. Remember we had a 5.1. You could have just removed it right before the 38.20. And if you want to have a 2 beautiful back-to-back trade, you could had something similar to that. Now, I mean, it's unrealistic. Like the probability for you to do this kind of trade is very low. Reason being is that you need a lot of experience and a lot of understanding, and the only way to know it is your fundamental analysis that's going to give you and dictate you the rate of your success. And these 2 trades you could have done almost 16,000 pips, 17. That's a lot of pips. Yeah, let's go with another example. Let's go with another random example. We're on a 1 hour. All right, this one, 61.80 golden ratio. I believe this is the one. So beginning of the movement right there. Okay. And yeah, like this. And voila. So it's not a 61.80. It was a leak, almost touched the 78.60, but literally bounced back on the 61.80. So yeah, the intention was right there. These ones were not the most efficient one because it did not touch precisely our 78.60. But then afterward, you could see that the take profit area was utilized perfectly. And you could even see the wicks here bouncing on top of it, like zone of demand here and a zone of supply. This here and this right there. And then eventually started to sell out. Small resistance here. Didn't touch our minus 27.80. And then afterward, let me just extend this fib just to see how did it reacted right afterward. And then touched the minus 161 exactly, and the minus 200, minus 227, and then finally minus 261. So you could, you could keep your current level of Fibonacci if they're effective. Just keep them, depending on what time frame that you're trading it. But this one was an effective one too. Lovely. But I'm trying to find another fib for you guys. Last but not least, this one. Yeah, this one is perfect. So 61.80, one touch directly afterward, our take profit number 3, 4. You could see this one had on the 23%, we had triple the bottom here. So tested, couldn't break it. We had a moving average also as a confluence. So anyway, without further ado, I mean, Fibonacci's are pretty simple to use. You use it from the low to the high, and you have all the sequences of your take profit. It could go high, it could go low, really depending on your fundamental analysis. And just to remind you guys, fibs, supply and demand zones, moving average, key levels, and all of these tools are only there to tell you what is the best price. That's it, that's all. The rest, it's all your critical mind, your way of thinking, your perception, and also the fundamental. What's going on with the market? It's not technical that tells you the market will go up or down. It's going to be the fundamental analysis. On that note, hopefully that was insightful. I will see you guys on the next time. If you have any question, suggestion, let me know. Take care. Cheers.